Funding for this program is provided by the George Edward Durrell Foundation, since 1984 a major center for research and education in the fields of money and banking.
The National Endowment for Liberty presents At Issue, the in-depth forum on freedom in America today. Hello, I'm Michael Hayes. The host of At Issue is the physician, author, and former member of Congress, Ron Paul. Ron?
Thank you, Mike. Today we're going to look at the Federal Reserve Board, our central bank, how it creates our money, how it can ruin it, and whether or not we even need it.
Our program today, as usual, will consist of our probe report on what's at issue, reactions from a group of average citizens somewhere in the country, and an in-depth analysis of the entire subject by our panel of experts. We'll begin our probe report, It's Only Money, following this brief message.
This is one in a series of programs that takes a fresh look at critical issues affecting how you live and how you use your natural rights as an individual to make decisions about your life. At Issue is brought to you by the National Endowment for Liberty because we agree with Thomas Jefferson that government governs best that governs least. The National Endowment for Liberty is a nonprofit, nonpartisan educational project. We do not accept state or federal funds. In fact, we don't count on any agency of government at any level to keep this program on the air. Instead, we count on the generous gifts of individuals, people just like you. Write to us at Post Office Box 580099, Houston, Texas 77058, or call us at 1-800-333-3545 and ask for extension 909. If you missed any part of this message, keep your pencil and paper handy. This information will be repeated.
That's
your check, sir.
Oh, thank you. Do you take Federal Reserve notes?
No, sir. We take Visa, MasterCard, and American Express.
Have you ever seen a Federal Reserve note?
No, sir. I don't believe I have.
Of course she has. We all have. We just don't think about it very much. Federal Reserve notes are money. Ordinary U.S. folding cash. But what is the Federal Reserve, and how did it get the right to print money? And is our American monetary system the best we could have?
It's gone through a long evolution. 200 years ago, it was a silver coin with a gold coin and a copper coin as part of the system. And individual banks would issue promises to give you those coins. And then through the Civil War, the federal government started issuing those promises to eventually give you those coins. By 1933, they had taken the gold coins completely out of the system. And by 1967, they had taken the silver coins completely out of the system. So all that's left now is the paper promise to pay you these coins, but they don't have coins anymore.
The Federal Reserve Board and the Federal Reserve Banks are two institutions all under one umbrella. Federal Reserve Banks are payment system administrators and service agencies. The Federal Reserve Board is the group of people who make monetary policy. Now, the Federal Reserve Board is itself a part of the Federal Reserve Open Market Committee. The Federal Reserve Open Market Committee creates money, basically.
When you increase the money supply, we say you inflate the money supply. And each single dollar in the money supply then gets smaller and smaller and smaller in the amount of real goods it can buy. So that's inflation. It's a shrinking of the dollar. Prices go up only because you're paying tinier and tinier dollars for the same thing.
The association between the Federal Reserve Board and inflation is remarkable. For over a century, the value of the dollar bobbed up and down in a fairly inconsequential way. The Federal Reserve System was created here in 1913. For several years, its activity was limited, but in the 1930s, all that changed. Many analysts believe that mismanagement by the Fed greatly increased the severity of the Depression, and in any event, it set off a wave of inflation that has remained unabated ever since. Neither bad times nor good, peace nor war, Republicans nor Democrats have been able to stop the hemorrhage. The value of the dollar plunged, plunged, plunged. Today, The $1 Federal Reserve notes in your wallet are worth just 11 cents compared to the first dollars printed by the Fed in 1914.
Inflation today is higher than it was in August of 1971 when Richard Nixon was so outraged at inflation that he imposed wage price controls. The inflation, we've just gotten used to a level of about 4 or 5% inflation. And we think that we're better off now because it's no longer 12% the way it was in 1980. But inflation is still very serious. At 4% inflation, you have to realize that the purchasing power of your money gets cut in half every 18 years.
The Constitution gives Congress the power to coin money and regulate the value thereof. What did the Founding Fathers actually intend?
They used the word coin with the specific intention of ruling out printing paper money. They'd already suffered a disaster during the War for Independence because of the printing of continental dollars by the Continental Congress and state legislatures as well. Runaway inflation. The continental dollar declined to 1% of its original value. So they used the word coin to indicate that future money that Congress might make would be metal, gold, silver, or copper for the smaller coins.
In other times and other places, currencies have known even more drastic inflation. This note from the French Revolution promised death to counterfeiters, but rapidly became so worthless, only a fool would have made phony ones. This 10,000 cruzado Brazilian note has been overprinted to be worth only 10 new cruzados. It will be worth even less tomorrow. Clearly, inflation is something to worry about. Can the Fed do anything to stop it?
A member of the Federal Reserve Board of Governors, Wayne Angell, traveled to the Soviet Union last November and urged Mr. Gorbachev to back the ruble with gold, because that's the only way to rescue the Soviet economy from chaos, he argued. And that's a very good argument. Mr. Angell realizes that hard currencies can correct economic problems. Unfortunately, the Federal Reserve hasn't applied that same lesson to the United States.
A return to a hard currency backed by gold or other commodities is advocated by many economists. Some go one step farther.
The best system would be certainly to abolish the Federal Reserve Board, to freeze the quantity of money that the Federal Reserve Board has already created, and keep it that way forever, but to privatize the Federal Reserve banks.
Most of our money today is really private money. Your checking account is private money. You see signs in stores that say no checks accepted. It's not legal tender, they don't have to take it. But they will take checks if they know you or if they know the bank. They will take traveler's checks, another way of sort of certifying that this is really good paper. They will take your Visa and MasterCard and your Discover card and your American Express card, and there's several other cards out there that they will take, because they know that there's sort of an insurance guarantee. The card issuer says, if this proves to be bad somehow, we will give you some compensation. If there's a telephone line you can call immediately to see, is this a good piece of paper or a good card? And so it's these other free market things that really protect people, not some government decree saying our money shall be the only good money.
In these times, when the failure of central economic planning has been demonstrated around the world, it's not yet clear whether central banking systems, like the Federal Reserve, will fall victim to an American perestroika. It might not happen, but then again, it might.
Governments around the world have central banks. Japan has a central banking system. The Soviet Union has a central banking system. England, all the major governments in the world. If the United States were to abolish the Federal Reserve System and move to a sound currency private money system, it could outcompete any other banking institution in the world, and we could dominate the 21st century. The 21st century need not be the century of Japan. It can be the century of the United States, so long as we're willing to stick by our principles of private property, competition, and free enterprise in banking as well as everything else.
Money isn't everything, but it does touch every part of our lives. From big business to small change, the color of money is woven into the very fabric of basic human values and traditions. The George Edward Durrell Foundation sponsors conferences, publishes books, and funds research into the history and theory of sound money and banking, as well as current problems such as the savings and loan crisis. A teaching kit provides high school teachers and homeschooling parents with a complete set of instructional materials, all designed to bring the lofty, impersonal world of money and banking down to earth. Video and audio tapes are also available. The highly respected Durrell Journal of Money and Banking publishes important articles by leading economists in the field. The journal is distributed free to individuals. If you would like to receive the Durrell Journal of Money and Banking, or wish more information on the Durrell Foundation, please call or write the National Endowment for Liberty. We will be delighted to accommodate your request.
Well, when it's 4 and 5% now, we all feel pretty good because it's not 10 or 12% like it was. And sort of
Each
what
week
Bill
on
said,
that
the
issue,
fear of it
we show the
being
probe
back
report
10 or
you've
12.
just seen to a group of citizens somewhere in the United States. What you're watching are the unrehearsed reactions of a group of people in Alexandria, Virginia, to the probe report, It's Only Money.
Mid-200s, all right. By the time we pay off our mortgage 30 years down the road, if that just appreciates 4 to 5% per year, that house will sell for $1 million 30 years from now. I mean, that's what 4 to 5% inflation will do to you over time.
And I think it just hits you that sort of what you said, you know, you fear, you know, inflation hitting the high levels, and we're all, you know, don't want that, but you don't see a lot of people or hear much talk of, can we get it down to 1 or 2%?
Obviously, I knew that the value had gone down, you know, a great deal, but, you know, to see that before the Federal Reserve was put into place, that the dollar was pretty steady, and then since then it's just gradually, you know, taken you know, gone downhill, advocates the need perhaps for, you know, private money banked, or, you know, private banking system versus a federal backed system.
As long as currency is more or less equal in value, and currency is like the intrinsic value of man's value to his fellow man or woman or something like that, it's all right. As the dollar loses its value, in theory, government can just keep printing dollars to replace them. But then currency becomes a sense of sort of political power and manipulation, and where money does not become a product of one's value to one another, but those who can maneuver the system.
I think that putting something solid like the gold back into the system maybe is a reasonable thing to do, because maybe we've found that trust isn't enough. And that's what I've been trying to say here tonight, is that I think that we're being manipulated. Everybody is being manipulated.
We as individuals, if we continue to charge credit and can't pay for it, we go into bankruptcy. And the government simply would be in the same position. And we seem to be very close to that with this tremendous deficit.
I remember the 70s being scary, I mean, just because of the gas and not having enough. But I think it is now with the new president and the deficit's high, and I think that we, you know, could be headed for a recession, and I think it is scary now.
I was recently in Yugoslavia, and they trade by dinar. And at the time, their rate of inflation was 3,000%, and most people in the country would rather have U.S. dollars given to them in trade for different things, and that is scary. Our dollars aren't worth anything.
I look upon the American economy as an engine being powered by its people. And as long as that engine continues to run, I think we're going to be fine. But the question is, will people be allowed to just get up and go forth and do that without politicians tinkering with the tax code and manipulating the money supply and doing this and doing that? Will we have the freedom to go forth and make good lives for ourselves? And that's the real question. And if we are allowed to do that, I think our future will be just fine. If not...
When you talk about money, it gets interesting. Let's see what our panel of experts has to say on the subject. Dr. Catherine England is an economist with the Cato Institute in Washington, D.C. And Dr. Robert Anderson is Vice President of the Foundation for Economic Education. Our host and permanent panelist is the Chairman of the National Endowment for Liberty, Ron Paul. Ron, During the documentary portion at the beginning, still sticks in my mind that graph showing the red line plummeting. What about that?
I think it's scary. And I think if the American people knew the significance of that graph, they wouldn't sleep as well at night as they are, because it is very, very serious and it affects everybody. Anybody who uses money, anybody who works for a living, or anybody who buys something should be concerned about that graph. Now, the interesting thing about the graph is if you took that graph and just turned it upside down and had it going upward, I imagine that would follow the course of the money supply. You know, for some reason, this country has embarked on this inflation of the money. There are some very pertinent reasons why a country does inflate, because this is nothing new. Countries have been inflating for years and years, and I imagine they'll continue to unless the people understand the issue and they do something about it. Let's assume for a moment that I had the same authority and the same power to create money. Let's say I had the perfect printing press that printed the money exactly like the Federal Reserve does. I would be very wealthy, quote, wealthy. I would have economic power, and I'd have political power too, because I controlled the money. I don't. If I do it, I'm called a counterfeiter. But if somebody else does it who has authority coming from the government, they call it legitimate. But I'm convinced there's still a lot of economic power and a lot of political power. For instance, the Fed, it's not unheard of for the Fed to create out of thin air, new money, $10 billion in 1 week. That's power. What do you think of this, and who is it that has this power, and should we be concerned about it?
Do you want it? Well, Ron, the power exists because of a legal framework that has denied free choice to market participants. You and I are by law required to use the money that the Federal Reserve Bank issues. It possesses legal tender power. We have no choice as far as accepting it, and we have no choice in terms of using an alternative. So you have two issues here, really. One, you have political manipulation of the money supply by the Federal Reserve Bank, and then you have the Federal Reserve enjoying a legal monopoly regarding both issue and use of money. And the solution, of course, is to remove the political forces from determining what our money will be and give back to market participants freedom of choice as to what they wish to use as their own money in their trading activities with others. And in doing so, then it no longer would be a political issue. It would restore money to the market where it properly belongs and where it originated.
I think it's important to follow up on your question about political power, and that's true, and for people to understand the role the Federal Reserve plays in the whole structure of government, in fiscal and monetary policy. It's independent, nominally. In other words, the Federal Reserve doesn't have to rely for its budget on Congress. Congress doesn't authorize its budget. But it is very tied into the political games that are played in Washington. The Federal Reserve Board chairman has to report to Congress and answer questions. The Federal Reserve Board members are appointed by the President and approved by Congress. And what we've seen historically, the reason we've seen the plunging value of the dollar is that politicians gain when the Federal Reserve increases the money supply in an unexpected way. If we don't expect that it's going to increase the money supply and we get new dollars, at first everybody looks a little richer until we begin to realize that the value of those dollars is shrinking.
You know, there certainly are those in Washington who benefit, because if there's a huge debt and they can't tax us enough to pay for this, of course they could run to the Fed, and the Fed creates the money, and this helps the politicians out. So it does involve political power. But you know, I found it interesting. When I was in Congress, I was on the Banking Committee, very interested in this issue, obviously, and I wanted to learn more about it. I was on the Domestic Monetary Policy Subcommittee, but I had no access to what was going on. I couldn't attend a Federal Reserve Board meeting. I couldn't figure it out. Even if I had to, when I had to vote on the CIA funding, at least they had a secret room where I could review some of the expenditures, learn a little bit more about the CIA activity than the average person knows. But I could not do that with Fed, so it's done under very, very strict secrecy. So obviously they are very protective of this economic and political power. You know, I've heard it frequently said that, you know, I benefit from inflation. My house just went up. It went up 20% last year, so I'm benefiting. Why do you want to stop the inflation? do you have an answer for them, Bob, that says this, that those people who argue that they benefit from inflation?
Well, Ron, of course, you're commingling various economic forces that are work in the general economy. Probably the most serious misconception of all, however, is that money is wealth. Money is a medium of exchange that expresses wealth and serves in the market to provide information to both producers, consumers, to everyone as to how they should act in an economic sense. The accumulation of wealth is a result of the market process producing a greater quantity of goods and services, not a greater quantity of money.
Bob, if we can hold that thought for just a moment. Everyone's interested in what's happening with the worth of their home, so we'll be back. Right now we're going to take a break and return to more views and comments on the subject at issue in a moment.
Throughout this series of programs, you will see ideas examined that affect every part of your life. We'll look at issues from a new angle, not from the left or the right, but from the perspective of individual liberty and responsibility. We believe our founding fathers were right. We are endowed by the Creator with certain inalienable rights, and among these is the right to life, liberty, and property. We do not accept your money transferred through state or federal government agencies. Instead, this series is funded by direct voluntary gifts from individuals. We are the National Endowment for Liberty. Call us right now, 1-800-333-3545, extension 909. For a transcript of this program, specify the subject and send $5 in a stamped self-addressed envelope to P.O. Box 580099, Houston, Texas 77058. The National Endowment for Liberty, providing information on America's most precious resource, individual freedom.
And we're back. Ron, you were about to respond to some of the things Bob said.
Yes, I think that some people do benefit from inflation, but unfairly, and I think that is one of the evils of inflation. Because isn't it true the individual who gets to spend the money first has the benefit of having a greater purchasing power than the average person? So if you're a banker, a big businessman, or government, you spend the money has value, because the higher prices, which is the consequence, takes a year or 2 or 3 for that to come. Who gets hurt the most? It's the little guy. I think the person who suffers the most is the low middle income who's unwilling to go on welfare and can't quite make it, and their prices go up, and they're the first ones to lose their jobs. Is this the way you see it?
Yes, it's also the people on fixed incomes who, like retirees, whose incomes are fixed and they don't have the benefit of unions out there trying to raise their wages to keep up with rates of inflation, or people who are in non-unionized sectors often also have trouble keeping up. The other thing I would go back to the point about the house, there's been a lot of concern lately that it's really hard to get into your first house these days because the price of houses has risen so dramatically over the past 10 to 15 years. And that's, of course, a result of inflation. It is harder to get into your first house, as even with your wages going up. As the price of that first house increases, the difficulty in getting a mortgage for it and in servicing that mortgage over 30 years becomes tougher and tougher.
Bob, I know you're an expert economist, and we're talking about inflation, we're talking about high prices and why the government is increasing the money supply. But what about the other side of the coin? Is it not true that the recession and the depression is related to this very subject that we're talking about?
Only in the sense that the manipulation of the money by increasing its quantity causes economic error to be made in the market by distorting prices. Too often we concentrate just on the fact that the market basket of goods have increased in price because of inflation, ignoring perhaps the much more dangerous and subtle effect of inflation distorting all prices and giving erroneous information to the entrepreneur businessman who then makes disastrous error in how they employ their resources. And this, I think, is perhaps the hidden evil of inflation, which we all too often ignore by concentrating instead on higher prices.
And of course, if you talk about the price of borrowing money, the interest rate, this is obviously distorting the interest rate, and this sends bad information to the businessman, and then of course brings on the recession as they try to correct the prices that are going up. I think it's very legitimate to argue that if anybody's concerned about people being out of work, they ought to understand this issue of money. They can't possibly solve the problem. They can't do it by demanding more spending from the government and come along and say if the government would only spend more money, which puts more pressure on the Fed to create more money and compounds our problem. So I think it's utterly critical that we do that.
Ron, our time is getting short, and we're going to need to wind this up. Let me ask each of you to comment on the short run for the moment. Catherine, what's the next step? What's the first thing that ought to be done for our ailing dollar?
The first thing that ought to be done for our ailing dollar is that we have to begin to demand as citizens that to get some accountability from the government, including the Federal Reserve, and to look for other alternatives rather than just having a Federal Reserve that can create as much money as it wants. It's important for people to distinguish between increasing prices and inflation. And increasing prices are like the price of tomatoes go up when there's a freeze in Florida that affects the tomato market. But inflation results when the value of the dollar begins to decline because we have too many dollars being pumped into the economy. And that's when we get these distorted decisions by businessmen and when we all begin to get in trouble.
Bob?
Mike, I think that the first thing that must be done is to give people freedom of choice. Give them freedom of choice in terms of what they wish to use as their money, and give them freedom of choice to reject the political money of the Federal Reserve Bank by abolishing the legal tender provision. And in so doing, the market will respond, as it always does, and will restore the medium of exchange, gold, as our money, and we will solve our problem, I think, in that way better than anything else that we could do.
And with the last word, Ron Paul.
Yes, and I certainly can concur with Bob. We need competition. This is the best first step, is actually to legalize competition with the Federal Reserve. Actually, the ultimate correction will come when we force our members of Congress to obey the law. If Congress would obey the law, they then could not print money nor give this power to the Treasury or the Federal Reserve to do so. It would be the most important economic positive change we could bring about.
Ron, that's where we'll have to leave it. I want to thank our panelists for being with us and you for watching. We'll be back next week with another vital topic at issue.